India Budget 2021, co-powered by all new Nissan Magnite. Ignite your charisma.
The backdrop of this year's budget makes it imperative that the government comes up with a sound plan to revive the economy. The primary imperative is growth. Welcome to another episode of India Budget 2021. I am Gautam Chikermane, Vice President at Observer Research Foundation. And tonight we have Vidya Mahambre, Professor and Program Director at Great Lakes Institute of Management. She joins us from Chennai. We also have Anant Narayan, Senior India Analyst Observatory Group LLC and Associate Professor at SP Jain Institute of Management and Research. He joins us from Mumbai. And finally, we have Lord Meghnad Desai, an economist who joins us from London. Welcome, everybody. I want to begin by just placing the issues in front. Over the ever since COVID happened in February, March, there has been a great debate about the government should spend more, should give more, there should be a fiscal loosening and so on. And that has happened to the extent that a $2,000 per capita economy can offer. In this budget now, it's almost a year, it's 10 months since the lockdowns happened and the economy sort of shut down. In this budget, what should be the strategy? Should there be further fiscal loosening? If so, because of the loosening, do you think it will impact inflation? If so, how do you manage a greater spending that is required in order to get the economy out with lower inflation that hurts the poorest of the poor the worst? I'll first invite Vidya Mahambre here.
Thank you, Gautam. Indeed, the near-term challenge is to revive growth, as you have rightly put. And I think everyone expects budget to provide or increase government spending, especially the capital expenditure, mainly towards infrastructure projects. So something of this sort is going to happen. It will involve giving up on fiscal consolidation for now. Fiscal deficit is expected to increase maybe around 7-8% of GDP. As you rightly put, how do government raise funds for it? So one of the things which must happen, which government has tried to do, and it's on the back foot right now given the COVID thing, is of course the sale of public sector assets or disinvestment. So that will create some amount of funds to be available for capex. The poorest of poor, indeed, they are the most hurt. Means informal sector jobs. That's where we saw millions of jobs cut, and whatever support that could have been given has given. In the second half of the year, whatever projections are, second half of current fiscal, that is, whatever the projections are, the growth will be near zero. That is essentially back to the output where it was a year ago. By all estimates, next year's growth is around 8, 9, 10% of GDP, right? So if that is true, then near-term challenges are sort of we are addressing. But I do feel this budget also needs to focus on the persistent challenges for the durable growth. So there is a cyclical element, and but the structural element has never gone away, right? So towards that structural element, I would think budget should address that. Government has in the past done several things. We have seen improvement on digital public services, which is a big revolution. We have seen GST rollout, but I do believe there is policy inconsistency, which needs to be sorted slightly, especially on the fronts in which central government can do something, right? There are, as we know, because of the constitutional structure, there are several things on which central government cannot do much, such as say, agriculture or land directly. But they can definitely do something on taxation. So even though GST has been monumental, it has not stabilized. We continuously keep on seeing the revisions. Now, no businesses can operate, in that environment very well with so much uncertainty. We have seen slight, or at least I think, which is a slight inconsistency in terms of, on one hand, we want to get integrated into global supply chain. On the other hand, in this, in the same paragraph, we talk about import substitution and raise import tariffs. So that's again inconsistent. Direct income tax, we have two regimes going side by side. This budget should do something about that, because that's critical. So these are the few things from the structural
Thank
side.
you.
So
Anant and Narayan, I'm coming to you now. When we say that the government should spend more, it obviously needs more money. That money can come either through a greater taxation or through borrowing. Taxing the people more is going to hurt. Borrowing the people more will raise inflation, which will hurt indirectly, but it will still hurt. What is the way out?
Well, thanks for having me, Gautam, and pleasure to be here with this lovely panel. Look, I think the broad objective that the government has to set for itself is to achieve something we have failed to achieve for the last 20 plus years, which is robust domestic output growth and sustainable job creation. If we can manage these two things, a lot of our macroeconomic issues, whether it is inflation, whether it is external balance, whether it is fiscal balance, all of this, and of course, the need to grow and the need to become prosperous over time, all of this will get addressed. Now, easy for an armchair professor like me to say this, how on earth do you achieve this? I think what Vidya is saying is right. We do need spending from the government at this point in time, but I would argue it's predominantly for investments, right? What investments? First is, of course, infrastructure. If we want to get supply chains from China and Vietnam onto India, let's do everything we can to supplement the labor reforms and the PLIs, etc., to get the supply chains on board. Second, we have to invest in education, into healthcare, into nutrition, into sanitation. This is not out of the goodness of our heart, but if we want our future generations to actually grow up, create jobs, create value, we have to make these investments. It's a purely capitalistic decision that we have to take. The third is, again, there are impediments to creating jobs and output right now. The state of our financial services ecosystem is bad. The state of our power sector, real estate sector, telecom sector are bad. Now, many of these will not get addressed in the budget, but there has to be a path provided by the budget on how do we repair our financial services, our power sector, and so on and so forth, so that we create the ambience for creation of jobs and output. Now, you raised the right point, Gautam. All this is great, but how on earth do we create the money required for this? I have a few suggestions in this regard. Shorn of the accounting smoke screens that we use both at central and state level, the true central fiscal deficit will probably be about 8% of GDP for this fiscal year. And the true revenue deficit will probably be close to 7% of GDP. That's a tremendously large number. I think we've got to have a glide path to bringing down the revenue deficit down to zero, maybe in 5 to 7 years. It is possible, by the way, especially if we get some good nominal growth and therefore tax collections up. So that's the first part. Create space for capital spending by over time bringing down the revenue deficit, something the FRBM unfortunately skipped over in the last change. The second part, you raised the point about do we increase taxation or do we borrow? I don't think we should increase taxes now. So look, there is a K-shaped recovery. So there are people, especially the urban rich, who can afford to pay taxes on capital gains, etc. But given the nature of the economy, I wouldn't raise taxes right now. I think I would do two things. One is, as Vidya mentioned, try and have a glide path towards a lot of disinvestments over time. Give yourself time, but do it. Second, I would raise money, Gautam, and I would raise money directly from the savers. Look, one of the issues we have around inflation is there is a lot of money supply. M1 growth is close to 20%, M3 growth is close to 12.5%. That can create inflation. You need to provide an avenue for this money lying around to go somewhere into savings. So if they can come out with a good savings plan directly to savers, so something like a 6% tax free for savers, I think you can raise 3-4 lakh crores easy with a good plan like that. That will help bring down asset prices. It will give some avenue for people like my mother to invest in and get some decent returns.
That's right.
And it will help reduce.
There's a whole lot of risk-averse investors who hate the government in general, but love the government guarantees that are offered. So I think such a product would do very well. Meghnad, I'm coming to you now. The world over, the discussion is that don't worry about fiscal deficit anymore. Let it go. India is also following the same. In fact, we are forced to follow the same because being a poor country, there is no money. But this problem exists, not this problem, this phenomena exists across the world. How do you see it from London? India in particular, and in context of the global situation?
Well, all across the world, all the fiscal rules have been dismissed, which were there of old. IMF and World Bank and everybody, even the European Central Bank, are saying, forget about deficits, forget about managing your debt, the debt GDP ratio, and so on. Protect livelihoods first. And the money will come partly because right now interest rates are the lowest they have been, in a century more or less. There are negative interest rates. The government of UK is borrowing at a negative rate of interest. It is several times what it normally used to borrow. So there is a scope. You see, the Indian deficit has always been a smoke and mirrors thing, as we all know. And so, most important thing is to manage the recovery, because the economy was slowing down even before COVID. And we have to resume growth. I mean, we had very good growth, say, between 1998 and sort of 2014, 2016 even, high single-digit growth. Now, first of all, we have to have 10% plus growth this year to be able to get back to the old normal, the 2019 level of GDP. And then I think you have to plan for growth. So I would say two things. Don't worry about deficit, print money. And secondly, sell assets. Aggressively sell the private sector banks. Aggressively sell as much public assets that the government has. Keep the monetary conditions lax, because that will make it easier to sell the public assets. And I think about the inflation. I have for a long time held the view that money supply doesn't cause inflation. I wrote a book about it long ago. But Indian inflation is a matter of local scarcities, not general purchasing power. It's an onion problem. Or diesel, price of diesel thing. There are certain sensitive sectors which, if the government were to watch carefully and be prepared to import or whatever, I think Indian inflation can be kept in control, and I think Indian interest rates are artificially high because of the fear of inflation that the RBI had. I have never taken that seriously, because Indian consumer is sensitive to items of daily purchase. If you manage the onions and the tomatoes and the and the sabzi properly,
the essentials. Manage the essentials.
No, not just essential. The daily purchase. People are very sensitive to things that they buy with cash. Very sensitive. Whenever I go to India, the price of vegetables is invariably one of the topics we end up discussing. So I think Indian inflation is very much that kind of daily essentials sort of inflation, and not general inflation.
What you're saying is inflation will, in some way or the other, manage itself, or if policy intervention is required, it will be within a limited space, and the government need not worry too much about it. I'll come to you now, Vidya. Alongside the pandemic, the problems that have been caused by the pandemic, there is a new problem that has emerged, which is that governments across the world, countries across the world are shutting down. The import-exports are closing down. Everybody is, sealing their borders in terms of financially as well as partly physically. In that context, where India has a fairly decent, about 35 to 40% of its GDP from trade, how does India negotiate this global change through fiscal or monetary measures?
Yes, there is indeed a move towards, Gautam, as you said, towards protectionism, and in fact that move had started even before the pandemic started. So that's nothing new. It has become more stronger. But I do believe that it is not sustainable. The move towards protectionism, eventually, countries are going to realize in 2, 3, 4 years' time that raises prices for almost everyone and reduces prosperity for each and every country. So I don't see this movement as a durable movement. But if we can use this time period, we have this buying time period to improve, especially our manufacturing. Means, as Anand rightly said, it is the issue of job creation. Means India will boast the largest, working age population in the world later this decade. The question is, how do we create jobs for this, billion, almost 1 billion, people? And if women want to work, women LFPRs right now, labor force participation is very low. And if educated women want to come in the labor market, the pressure is simply going to increase even further. And several decades we have talked about, manufacturing expansion. But giving very high protection, because other countries are giving protection, giving very high protection is, I don't think our industries are really like infant industries. So it's not that an infant can be given protection and can be nurtured and then you remove protection. It is essentially, they are dysfunctional adults, right? So the problem is on cost efficiency. So the whole focus should be how we improve the cost efficiency of Indian manufacturing, reduce their bureaucracy burden, right? Reduce all the compliances that they have. So if we can use this time period where there is move towards protectionism to improve the efficiency of manufacturing. So even agriculture, agriculture crisis, I believe, is essentially a jobs crisis in non-farm sector. Because, you cannot double farmers' income when you have 60% of farmers which are small and marginal farmers, right? The productivity of agriculture is very low in India. When it improves, prices are going to fall. Food is inelastic. Demand, unless, of course, we push for processing and food exports, agriculture exports, or the processing sector, correct? So without that, small-scale farming is completely unviable. Only because they don't find alternative decent jobs, they are doing subsistence farming. So even that is a jobs crisis, correct? So we can use this time period. Essentially, we have Make in India, but manufacturing to GDP share has remained at 14 to 15%, I think, since 1980s. It hasn't budged. Even after 2014, not expected, because these things take time. So once you put in a reform, it's not that next year's growth you're going to see manufacturing expanding rapidly. But all the things that manufacturing requires to improve cost efficiency, world-class infrastructure, less bureaucracy, on the ground,
right.
Much faster processes. And of course financing. So I agree with another banking sector. So that needs to be sorted. The problem government inherited, but it still continues.
Thank you, Vidya. Anant, I want to come to you by expanding the point that Vidya has raised, which is jobs and manufacturing and the role of budget there. There is a discussion ongoing which says that India has lost the manufacturing bus. There is also a discussion which is underway which says that robotics, etc., will replace human labor. And therefore, the manufacturing aspirations that India has, where you need a whole lot of push by the government, by private sector, money, etc., needs to be let go. And we should instead focus on what we are good at, which is at a mass level being surmised into this phrase called blue-collared workers, blue-collared services. Would you agree with that? And if so, how should we move forward?
So Gautam, I agree with what Vidya said. We've got to create jobs, and so therefore it's not a question of choices. It's everything, Gautam. We need everything: blue-collared, white-collared services, manufacturing, everything. Now, yes, we have missed the manufacturing bus for the last 30 years, the one that created China into this massive superpower. We've missed that bus, but it is still not too late. Of course, there is artificial intelligence and, machine learning and all of that, or robotics, etc. But there is still manufacturing available. Look at our own consumption, Gautam. We import not just energy and gold. We also import electronics. We import chemicals. We import fertilizers. We import toys. We import plastics. We import a whole bunch of manufactured products. I'm on the board of companies, Gautam, where 70% of our inputs and intermediates come from overseas. And when I ask my CEO, can we start manufacturing them here or get a SME to start manufacturing some of them, they laugh at me saying the ecosystem doesn't exist. But I see that as an opportunity. So it's the reverse as well, Gautam. To start with, look, there is an opportunity because even China wants to move away from the blue-collar worker, manufacturing worker into a higher, their China 2025 plan is to go high-tech and to start moving from middle-income country to a high-income country. Yes, countries like Vietnam and Bangladesh are giving us a run for the money, but nobody has a market of the kind that we have. Nobody has a consumption of potential of the kind that we have. Therefore, I think we still have the possibility of attracting supply chains into India. It's a golden opportunity for us. Now, what is required to fill that gap? How can we start creating manufacturing in India? Good things have happened, to be fair. Okay, so labor reforms have happened. You've had production-linked incentives coming through. Corporate tax cuts have happened. So all that is good. But it's not just 2-3 things, Gautam. It's a continuous process that needs to be followed. I've been to the special economic zones in China along with some, clients of mine when I was a banker. They roll out the red carpet when you want to invest anything into that country, right? And they say, here is a single window. You get all the approvals that you want. Here is your land parcel. Here is your guarantee of zero taxes for the next 10 years. We'll take care of everything from administrative to whatever is required. Just put in the money and start creating jobs and start creating manufacturing output. We need an outlook like that, which cannot be done in a centralized fashion by the PMO or the finance ministry alone. It requires all the way down to the local mayor, who's not an empowered entity in India. We need the entire ecosystem to be rolling out the red carpet and saying, please come and do what needs to be done. It's an opportunity, Gautam. Hopefully this crisis, and we had a crisis.
I agree, Anand, and I'm also, I've studied a lot about the mayor system, etc. But I think that would mean a governance rethink. The whole entire institutional structures would need to be dismantled or rethought or reimagined or reformed, for lack of any a better word. Meghnad, I'm coming to you now finally. You have observed countries across the world through their various growth trajectories, slowdown trajectories, and so on. How do you see India? Now, there is for instance, Anant just mentioned, companies that are exiting, let's call them the corporate refugees of China. They are looking to come to various countries. Most of the money in terms of billions of dollars of investment is going to Vietnam and not to India. Some of it is coming to India. Of course, they are, and there's a big song and dance being done about it, but not at the scale at which they are going to Vietnam. What's happening here? How do you see India as an outsider sitting in London?
India has always had a little bit of a problem about self-image. We've never had a good manufacturing structure because when the Congress fellows were in power, they believed in national self-sufficiency. When these guys are in power now, they got into Atmanirbhar. Basically, India doesn't like manufacturing. I think we've missed the manufacturing bus, and let's get out of it before it becomes highly automated. We missed the bus. Go for comparative advantage. We are very good at services. We get very good at services at home, and we export labor. We export labor like nobody's business. And I don't believe that we can ever have a government like China having these, special processing zones and all that. I remember the first time people started talking about those zones were way back in sort of 1980s, and nothing happened because all that happened, you created these zones, and people went and got the land, did not start any factories because they wanted to speculate in land. I mean, they're not stupid. Why would they manufacture? So I think India just has to decide that we are a country with a large consumer population, so everybody will come and sell us goods. Manufacturing is going to get cheaper along the way. Let us stick to services and let's get the finance services sector going. And that will be much better than going after manufacturing yet again. But we have been at 15%, as Vidya said, for I don't know for how many decades we have been 15% of GDP at manufacturing. So I think forget about manufacturing, forget about supply chains and all that. Those are just words. We are not going to get. Period.
Thank you.
Stop wasting money.
Thank you, Meghnad. We are out of time now, so thank you, Vidya, Anant, Meghnad. Thank you for being here with us. That's all for today. Join us tomorrow on another episode of India Budget 2021 at 7 PM IST. Till then, take care.
India Budget 2021, co-powered by all new Nissan Magnite. Ignite your charisma.